All right. What's up, tycoons? What's up, traders? Super excited for today's video. We're going to give another natural gas update. We're going to go over the spot price, then take a look at the futures chart, then look at oil, and then look at UNG. So make sure you stay tuned to the end of the video so that way you don't miss the key levels that I'm watching on oil and UNG. With that being said, smash the like button, subscribe to the channel. Of course, this video is not financial advice, but I am going to go over some of the things that made me want to start a position in natural gas. But that does not mean that you have to follow just because of what I'm doing on YouTube. Okay. Now, the main thing that I want to highlight here is the MACD and RSI signals. So let's go ahead and pay attention to the RSI first. Okay. And we're going to go over divergences. So see how we have a series of higher highs here, and then we have a series of lower highs here. Would be known as a bearish divergence. In an indicator, you may see some bearish activity. And sure enough, it eventually ends up playing out, and we see a sharp move to the downside. And then we have a bullish divergence where we're making a low and then a lower low. But on the RSI, we're actually making a low and a higher low. So remember, the RSI measures the relative strength of whatever you're looking at. So it should reflect what the price is doing, right? If the price is going up, the RSI should be going up as well. But sometimes there's these divergences, and these divergences are a really good indicator that traders like to use, right? We have bullish divergence over here as well, and we see a large move up. We have bearish divergence right here, and we see a large move down. Now, with that being said, you can also combine that with your MACD, okay? And this is going to be the MACD right here, and you want to look for exit or entry signals based on the MACD. And an exit signal is going to be this red line crossing down below the blue line. And we see that that lines up perfectly with our bearish divergence. So ultimately, we have two indicators now indicating we could see some bearish activity, and that happens. Over here, we get bullish divergence, right? And then we see a MACD crossover as well to the upside, an entry signal. We get a nice move up, and that's repeated itself many, many times in the past where you get a crossover plus a bearish divergence, and you end up seeing the move play out, whether it's a bullish crossover or a bullish divergence or a bearish divergence and a bearish crossover. So that brings us to the recent price action. Originally, we had a bearish divergence right here with higher highs on the spot price of natural gas and then lower highs on the RSI. And you can see that we also got a crossover right here to the downside on the MACD. And we had a very sharp move to the downside. Now, this downside move has been very exaggerated and overextended, and we're starting to see a little bit of consolidation phases now. Okay, we are holding the 2.43 level pretty well when it comes to the spot price of natural gas, and 2.2 are the major levels of support, right? We bounced off the 2.2 right around here, and then we rejected 2.43 a couple times, and we actually bounced off of it here recently pretty well. So, you know, if you want to be trading natural gas, you do need to pay attention to the spot price because it can be different than the price of the futures, okay? The futures market sometimes can go into contango, which I've got a whole video describing that. I'll plug that video later. But one of the main reasons that I got in, okay, is because we have bullish divergence, right? We have a low here, we have lower lows over here, but we have a low, and then we have higher lows on the relative strength index. So we're building relative strength, right? And we also got a MACD crossover. Now, it's been a little bit of a lagging effect, okay? The crossover occurred right around here, and you see we did go lower, but we have finally gone up there, right? And we're starting to hold now this 2.43 level. So pay attention to that level on the spot price. Above there, 2.79 is going to be a big resistance level. And above there, I think we could have the potential to come up to 3.32. All right. Now, another thing is that, you know, we had this initial bearish divergence. Look at what we've done. All right. I mentioned that we want to see a breakout, retest, and then push higher and flip this level from resistance to support if we're going to be bullish. And we did get a slight breakout, and we're retesting the level now. So it's going to be really important to see, do we get a look above and fail, right? Where buyers are presented the opportunity on a breakout to push price higher and ultimately fail, and bears take control and push price lower? Or are we going to see it, you know, really flip this former bearish divergence trend line into an area of support and try to trend it back up higher? Now we're going to go into the next chart, which is the 4 hours futures chart, giving you guys an update there. I mentioned this rising wedge, okay? This red area here is known as a supply zone, and then we have our demand zone down below. Similar to the last one, right? We have a MACD exit signal here where the red line crossed below the blue line. As you can see, that coincided with a perfect break and retest of our rising wedge, and we've started to move downwards. Now, just because we've broken the trend line and it seems like the pattern is going to play out on the rising wedge, it hasn't been confirmed, right? I mean, this is confirmation of a breakdown move, a break and retest, but ultimately, we haven't really seen the big push all the way down back to the 165 region on natural gas futures. There's a line in the sand right here, right at 209.3. You can see we bounced 1, 2, and 3 times. Okay, so we're starting to consolidate after the initial break and retest. And if we break this line in the sand, most likely we're going to come down and fill this gap here on the natural gas futures around 195 to about 190.5. There's a gap in between these two candles, okay? And typically these gaps tend to fill about 90% of the time. The big question is when they're going to fill. So, if we go into a bullish cycle, then this gap may not fill anytime soon, right? It may fill in the next bearish cycle. But ultimately, if we break this line in the sand around 209.3, there is a strong chance that we could fill that gap. And if we don't find support after filling the gap or somewhere in the gap, then most likely we're going to see the rising wedge play all the way out and take us back down to there. So, it is just a time to be cautious, especially if you're trading super leveraged right now. You want to wait for some clear signals, maybe look for the MACD to cross back above the blue line here, or maybe look for some type of a bullish divergence. You don't want to just get caught with your hands in your pants, basically, or with your pants down. Now, when it comes to the natural gas futures, the monthly chart looks pretty good right now, okay? And the reason being is because we got a clean bounce off the demand zone, right? We saw that on our previous chart over here. We saw as soon as we dip down into this area of demand, we got a big push up into our overhead supply zone. Now, if you're going to be trading natural gas, you need to understand the basic concepts of supply and demand. A demand zone is simply an imbalance where there's a imbalance of buy orders, okay, pushing the price up. Okay, meaning there's more demand at these levels, at these prices for natural gas than there is supply, and it's an imbalance that keeps pushing the price up. And we have our supply zone up here, okay, that we've tested in the previous, multiple times, and then we flipped it back to a demand zone. Supply and demand is similar to support and resistance. When you break through resistance, you want to look for it to act as support and then push back up higher. And now we're trading back below these levels, selling off in these levels. So it's back into an area of a supply imbalance. All right. But, we do have a bullish hammer reversal candlestick. Okay. And that's going to be this candlestick here specifically. Okay. Not the very next one. This is the March candlestick. And for this bullish hammer reversal to really get confirmation, we need to see this candle close above the highs of the monthly hammer candle. Okay. So March is just starting. There's still plenty of time. So this can go two ways, obviously, right? We can either close below, all right, or if we close above, that could be a bullish signal, and we could try to, reach the top of this demand zone here, or I'm sorry, the supply zone, and potentially break out into our next overhead supply zone as well. So, pay close attention on the monthly chart towards the end of March to see how it's developing. If we're going to be closing above that 240 area on the natural gas futures, then that's going to be a good sign and a good signal that we could get the bullish hammer reversal candlestick pattern to play out. So definitely pay close attention to that. Now, I mentioned, some of the different trading strategies and some of the different decay factors. Okay. So if you don't know, I actually have a complete video on the decay of Boyle, right? And also there's decay associated with UNG. So if you're interested in learning how that works, definitely watch this video on my channel right here. Okay. And I'm going over a couple trading strategies in this video, some of the main ones that I like to use, but I have an entire dedicated video to the top trading strategies that you guys can use for natural gas. And it goes into day trading, right? It goes into different indicators. It goes into scalping and swing trading as well. So, if you're looking for, what kind of strategies to use, definitely watch that video, whether you're a day trader or a swing trader, it's got something for you. And if you're interested in learning a little bit about the decay factor and some of the dangers and the myths, okay, because there are a lot of myths surrounding those, saying that you can't hold Boyle and make a profit if you hold it more than just a day or two. It's really just depends on a few market conditions, but there definitely is some decay associated with it. So click on those if you want to learn more in those. You can look those videos up or go to my channel and click on those. We're going to go ahead into Boyle now, okay, and take a look. Now, I mentioned this chart pattern before it started forming, guys, and this is why you need to subscribe to the channel and share these videos, is because really nobody's out there is giving better TA on natural gas, in my opinion, than myself, right? And so I mentioned that this is going to be the setup that we're looking for, right? And I did it when we were over here in this time period. I said, hey, we have this big major level of resistance around 795 right here. And, if we end up getting a pullback, we're going to look to form a right shoulder. And that's exactly what we're forming right now. So, we've got our left shoulder, we've got our head, we've got our right shoulder. If we can break out above that 795 level, then we have the chance of seeing this inverse head and shoulders play out and taking Boyle back up to the $10 to $11 region. Now, there's tons and tons of work to be done. Okay. So, it's not confirmed, but it is forming much more clearer now. Okay, so if we come back down and retest our previous lows, that's going to invalidate the inverse head and shoulders pattern, but it could give us a double bottom, right? So, be on the lookout whether we go up or whether we go down. There's still going to be potential for new patterns to form and new things to develop. It's all just about what's happening now. 795 is that big major overhead resistance. Okay, if we break our previous lows on Boyle, I have a support level around 320, which will be a pretty interesting area, honestly, to see if we hit. That's going to be extremely low on Boyle. This thing was in the hundreds not too long ago, about a year ago, right? So complete collapse in Boyle. And Boyle has definitely just shut down and been obliterated. And so, I know that that's why a lot of people are really interested in Boyle and natural gas right now, is because of these extremely low prices that we're seeing. But you still need to be cautious, okay? Keep a level head. Now, these are the Boyle fib targets and MACD and RSI signals. So very similar to the spot price of natural gas, right? If you take a look, we have a low here, we have lower lows over here, we have a low, and then we're just bouncing all this time along the relative strength index, making these equal lows. So rather than, going lower and losing relative strength, okay, what we're doing is we're actually maintaining our relative strength as we continue to head lower in price. So we have a slight bullish divergence there. This is that inverse head and shoulders that's forming. And you guys can see, this is when 795 was used as a support level a couple times. And then we flipped it to resistance right over here in February. And we came up and retested it again, put in a little bit of a double top at this area, started to get that pullback. All right, now if we break above 795, I mentioned that $10 to $11 region, that's going to be our price targets for the inverse head and shoulders. If we do manage to get above there, 1461 is going to be the major resistance level, okay? If we break through our major resistance level, then we have the chance of possibly hitting our Fibonacci targets. Now, we use the fibs because nothing moves in a straight line down or in a straight line up. Rather, you get a move down, retracement, continuation of the trend, or you get a move down, retracement, consolidation, and then a breakthrough reversal, right? And so if you take a look here, this is a reversal. So we have a swing high connected to a swing low. We move down, we consolidate, we retrace, consolidate, and break through, and then we put in a high and a higher high over here. So that's a really good example of a fib reversal. And then this is another example right here of a fib rejection, right? So then after we have our new high, we have a new swing low, we get this dramatic move to the downside, we retrace up to the 50% level and continue heading lower and get that trend continuation versus the reversal. Okay, so the three major Fibonacci retracement levels you want to pay attention to are the 61.8, the 50%, and the 38.2. There are other Fibonacci levels, definitely, there definitely is, but these are the three most common and well respected. So personally, those are the main ones that I pay attention to. If you want to tweak your Fibonacci levels a little bit, that's fine, but I definitely recommend at least paying attention to these three. Now, with that being said, we put in that high here after the retracement, and we really haven't had any type of a bounce, guys. I mean, we're really just consolidating sideways now after such a move. So if we do get some type of a retracement, our first target is going to be 1910 at the 38.2% retracement level, and then we have 2363 at the 50% retracement level and 2817 at the 61.8% retracement level, which theoretically speaking we should see some type of retracement, and it is very possible we could get to these levels, but we have to keep in mind that there's a lot of work to be done, right? We have to break past 795 and we have to break past 1461. If that happens, that's already going to be over 100% move. And so, I really wouldn't be surprised if we see selling pressure up at some of these levels and key areas of resistance after hitting all-time lows in Boyle. Now this is UNG. We have our daily ABC structure. And this is right around when I started grabbing some positions on UNG. Once we hit my C wave target of 752. Now the C wave here is going to be your 1.0 extension of your wave A to B. Okay. So that's how I came up with that price level. That's how I got there. We do have some support levels on UNG of 822, 858, 904, 1031, and 1167. Those are really my major support levels and resistance levels. And you can see we came down, consolidated through these levels, broke down, consolidated through them again. And, they've been really well respected. Things have just been bearish, right? Hopefully things are starting to turn around now, but we're really going to have to wait and see. UNG, you could say, also has an inverse head and shoulders forming. I'm really tracking Boyle on the inverse head and shoulders because if it does play out, then the returns on Boyle are going to be a lot nicer than UNG. But it's also a much riskier play. And if we come down on UNG, 715 is going to be our previous lows that we just made. So, look for a double bottom there. All right. Look for potential support there. And if we break below there, I'll definitely be doing an update video because I do have some support levels down below 715, but we're not really there yet. So if that needs to become relevant, I'll bring those up. Same thing with UNG. Okay, we have the RSI and MACD signals. All right, we had some bearish divergence right here. We got a MACD sell signal, and then we got a big move to the downside after creating higher highs and lower highs on the RSI combined with the exit signal. We end up getting a head and shoulders over here. And this was really nice, actually. We had, a MACD exit signal here. We had a move down retracement to the 61.8, giving you a re-entry on short positions. And then ultimately we move back down again, playing out that head and shoulders after breaking through the neckline there. And you can see that we've just, continued retracing, respecting the Fibonacci retracement levels each time, which is why I, use these three levels, because again, they're the most common and the most well respected. So if UNG ultimately does try to, put in a retracement after this big move to the downside, which we have already, but we're not even close to our 38.2% retracement level, that's going to be at 1271. Above there, we have the 50% at 1443, and above there, we have the 61.8% level at 16.16. Now, similar to Boyle, okay, we have to break through all of these major resistance levels right now. So plenty of work to be done. We really could just consolidate, or we could potentially head back down lower. We don't have to immediately retrace. We could, try to continue putting in new lows or retracing. So stay safe out there. Okay. Trade smart. If you guys are looking for strategies, different strategies that aren't necessarily covered in this video, you can watch that trading strategy video and learn about some of the different, techniques that you can use, whether it's moving averages, different chart patterns, things like that. And if you want to learn some more about the decay factor, make sure to watch that Boyle video, the decay around Boyle. Make sure to watch that decay video because I also go into some of the decay surrounding UNG, because if you didn't know, there is a little bit of decay there as well. So make sure to smash the like button, subscribe to the channel if you guys are new, and I'm out.